Hey, what's up, Aram? Sorry, a little bit late here today, man. Ended up, I guess, sleeping in a little bit longer than my alarm went off like 10 minutes to the show. I'm like, oh, darn it. All right. Well, good morning. Interesting market situation we find ourselves in. So, you're at the pool? Nice. Swimming in the morning, huh? That's a good way to wake yourself up. I never thought about that one. And I have a pool. Oh, gotcha. I need to start. I need to start doing that. I don't know, man. I have a hard time. When you get up, or you just do it on the weekends? Because I have a hard time getting up super early. The way my house runs, getting to bed at 10 o'clock is kind of difficult just by itself. 6:30. Yeah, see, during the weekdays, I'm up at 5:40. Then I do my two shows, and then I go to work 3 times a week. Okay. Yeah. I just have a hard time getting to bed at a good time. I don't even get 8 hours right now as it is. I really need to get better on that. All right. Let's get to some market stuff. So not in a bad spot. I kind of like some of these consolidations that are kind of forming between Friday and today. Ended up with little bit of a stalling candle right there, leading into this downtrend. Be going sideways since then. Um, we have buyers and sellers kind of equal at the moment. RSI and the dailies in the middle, so really could go in any direction. If we start to move over this trend line, though, I'm thinking things are not looking too bad for just chopping up here. I don't have any major alerts, especially on BTC. I do on some other tokens, but we'll see how those do. Hey, what's up, Ian? So, yeah, I mean, let's take a look at some things here. We got some time. Extend some charts out. So that right there doesn't line up with my happy thoughts this morning. Pretty abrupt uptrend. Looks like we're starting to play with the trend line, not in a bad way. Let's do some daily work. Let's go to, let's stay on this chart. So we are still fighting this 250-day moving average. We need to try to get above, ideally, the 200 as fast as we can now. They are going to be inverted here if they're not already. In the past couple days, they've been basically touching. So yeah, we just got inverted today, actually. So that doesn't by itself mean something, but it definitely um, implies a little bit more weakness in the market. Downward trending 50-day and 200-day. 200-day is still going up though. All right, 10 and 20-day going down. RSI where it's at. Yeah, overall lower lows, lower highs. That should not be text. So a bit of a broadening wedge to the downside right there on BTC. I don't remember what the good book says about broadening wedges. It's been a while, especially one that large. Let me pull out the good book. Good book is the Encyclopedia of Chart Patterns. That's the good book. And let's look at broadening wedge. 1659. Broadening wedge bottoms. And the breakout points at the top of the broadening wedge as it sits. Not sure it's a broadening wedge bottom though. Let's do the next one. They have 3 examples in this book, it looks like. 59. Interesting. Broadening tops. This could be a broadening top. Let's take a look. It says price trend is upward, leading to the formation. Megaphone appearance with higher highs and lower lows that widen over time. Oh no, this is not one of those. This is a different one. Not higher highs and higher lows. Oh, descending. Dang, he's got a bunch of them in here. Broadening wedges descending. That's what we're looking for. Failure rate 37%. Percentage meaning predicted price target 81%. So it's a bullish pattern. Falling wedges are reversal formations, whereas descending broadening wedges are act as a consolidation of the prevailing trend. Volume pattern is also different from falling wedges. In the descending broadening wedge formation, the volume tends to increase over time, but with falling wedges, it decreases. And it's starting to increase on the last half of this, not in the first half of it, though. So, yeah, this is actually a bullish pattern. Yeah, I thought it was. But the volume signature, he does show that it increases. This is kind of not exactly that. You've got it increases here. It doesn't increase here. So this is kind of a unique little snowflake. See if they have a focus on failures part here. I'm just speed reading right now. So he says one way to fail is to you get up here, then you rally past the trend line, then you start to come back to the trend line. So that's one level of failure. Okay, so you can come back in a throwback fashion, right? Which is the retest of the breakout. Breakout, throwback, then it fails. So the failure is the breakthrough, the pattern, not the throwback. But last volume is the biggest on daily and the weekly. Oh yeah, this capitulation bottom definitely is going to be the biggest. But it's not, over the whole pattern, it's not increasing though. I think that's one of the things. That's the thing about patterns. They generally imply something. I think that's key to patterns. And I think sometimes they also break formation. Um, and, the market changes its mind kind of. And I don't know. Maybe this is one of those circumstances where it's starting to get more bullish here for some reason. Speed reading again. Oh. So it causes a 5% failure actually. It says the price breaks out of the broadening wedge, descending broadening wedge, but doesn't go up more than 5%, then rolls over. So that's kind of one of his definitions for failures. Got a 5% failure. That's pretty interesting there. Okay, let's look at statistics. 117 formed in the 90s, from 91 to 96. That's when this survey was taken. Take that for what it's worth. Yeah, forget about a recession. We'll get one eventually. I mean, the market's already kind of in a downturn, so. 78 consolidations, 39 reversals, failure rates 34 or 37%, which is not bad. Average rise of successful formations is 46%. Most likely rise is 20%. Those exceeding the price target is 81% of those that break out. 64% have a rising volume trend, so that's not too great. Partial decline followed by upside breakout, 76%. So what he's talking about is it comes up to the top, has a partial decline, and then breaks out. So a little handle or a little, small base of some kind. Not bad. Oh, wow. He traded one buying right after the low, which is kind of where my little green trend line is there. That's kind of where he bought on one of these way back in the day, 95. Cool. Cool. So not a bad pattern. This is overall not a bad pattern. So good stuff. Broadening wedge on BTC. Broadening declining wedge on BTC. Good stuff. So continuation here. I don't know. Seems a little better. I'm actually a little bit happier with this price action in the past several days. The ability this nearly 10% day, which by the way does not put us back into an uptrend because it happened a little bit too early. But looking pretty good. If you look at the volume signature on the 2-hour time frame, VA Tool tells a really good story, at least on BTC. Some other coins not so much, but BTC not too bad. If you just look at the volume aggregation tool, if you guys don't know, orange is sellers, green is buyers. And you get the sellers stepping in here, then look at the buyers. They get very aggressive, and now we're back down to equilibrium, but we're at a much higher level. So and this is a nicer consolidation. This one's a little. If you want to be aggressive, like Bulkowski was. That book I was reading just a minute ago was written by Bulkowski, the Encyclopedia of Chart Patterns. And he bought this declining broadening wedge, and he bought it like down here, coming off the bottom, kind of like where this line is, maybe a little bit lower, and wrote it all the way up. That's pretty aggressive style. There's a couple chances, one there, one off of this one, I think. And past there, you already passed the halfway mark to the high, so kind of hard to buy there. But all in all, not too bad. Breaking this declining trend line, I think that's a good thing. You could have also taken a more aggressive stance, which I didn't draw as this one. You start breaking these declining trend lines, you get a little more bullish. More bullish here, more bullish here. We don't have another one. It's just those two. But as we know, also the higher you buy, the more likely it is to roll over until the breakout. So if you buy in up here, you're hoping there's going to be a breakout. Especially if you're buying up here. You're anticipating a breakout, which you always want to buy on the breakout. You don't want to buy before the breakout unless you see like very certain signatures, and you're going to be around to monitor it so you can exit it if you need to. But these are good situations. I like this situation. I like the fact that yesterday was really tight. I like the fact today is also really tight, and our volume is relatively normal. Or is it? I don't know. Maybe it's not today because it's Saturday, but and VA2 on the daily shows pretty good signs. Oh, interesting. Interestingly enough, my VA tool here. Remember we talked about this rising volume here just a little bit ago. Interestingly enough, the VA tool fairly early in that, right about here, breaks this declining trend line on the volume aggregation tool and that kind of is in the middle of this. So it does go down a little bit in the spike, but the buyers came in and really buoyed the market. Sellers moved up there a little bit on the decline, but nothing super aggressive. Definitely some pocket pivots though. And starting from the beginning picker, well, you better do it on 2x. I have some times in there where I'm reading, so 2x would probably be good. You catch back up in no time. Actually, apparently 17 and a half minutes. 8 minutes. 8 minutes, sorry. I meant 7.5. So, all in all, painting some good pictures here. I'm not really, yeah, it's looking pretty good. I'm not a big fan of V bottoms. A nice consolidation here, though, would do good. Uh, moving today, you just kind of have to go with it. I think if it happens, move this trend line to wherever we end up anchoring, and off you go. But Bitcoin's looking pretty good here. Again, we are fighting with this 200-day moving average. I think if we get over that, and we were down here as well last time we came down. There's that same candle, and I think I talked, I don't know, a couple days ago. Well, we were still down here about the starting to look like one of these where we consolidate and pop up. It just happened to be very fast that we popped up, so not a bad sign there. And back at the 200, I'm hoping we go up. And I do like the look of this consolidation. I think this is nice on the 2-hour time frame. Hopefully we can go up. So if you talk about breakdown points, which we often do, there's actually several on this 2-hour chart. This is a big one, but we got past it. Right there, we got past it with that consolidation, that little cup and handle looking thing. We got past it right there, and we're holding decently above it. This is yet another breakdown point. You can argue that's one. You can argue that's one. You can argue that's one. There's a bunch of little minor breakdown points before you get to these larger ones. But I would say this is probably the last of the breakdown points that are large. On the daily, you see this red candle. Maybe that one's important as well, which starts here, which starts with this one. Jiggy, what's up, Jiggy? You're welcome. So that could be kind of our last bastion of support, maybe. It's hard to pick the exact level. Not every chart is super clean and super easy, and this is one of them. But sometimes if you go to a higher time frame, like if you look at this, it's a straight cascade from here. It tried to find support there, couldn't do it. So yeah, maybe our level is actually here. On the 2-hour, it looks like it's here in my opinion, but on the daily, it's here. And you can go all the way up to the top in reality. So I don't know if you guys remember, but we talked about the doji, then the stalling candle, whatever you want to call it, the reversal candle, and that kind of started this drop. Obviously, up here you didn't know it would undercut that so quickly. Of course, none of us are also paying attention to that Japan carry trade situation, so it is what it is. That's why it's definitely good to pay attention to all kinds of markets, but we only have so much bandwidth, so you got to give yourself some grace, myself included. 21 MA on the weekly. You want to look at the weekly? I forget which. That's this orange one. Yeah, it's the orange one. What about the 21 MA on the weekly, Aram? Some resistance right there, maybe. Definitely good volume candle here, though. That looks pretty good. Good support. Let's look at this. Is the 50-day actually, this purple. We got a little bit of support there, although it came down in much more dramatic fashion. I'll spend a minute here on the weekly. Really didn't test it all here in 2017. And it's kind of hasn't been really a good bellwether. It's okay. Nothing works in this choppy area. I guess that's to be expected. This one held up. This was held up by the 21-day here. It's kind of aiming down the 21-day. Yeah, it is starting to curl over a little bit. The 50 though is still solid, and the 200's rock solid. 200 weekly, that's not going to be a big factor. because it tends to always trend up with BTC. I'm not sure. I think we did analysis on this, and I don't think it's ever trended down. 50 starts trending down really late, like really late, way too late. Keep in mind it's a weekly chart. Yeah, you start crossing this 50, you generally have problems. And so we are kind of touching it, so we do need this support pretty badly. And I would argue this is, what's the 50 akin to on the daily? Like the 377 or something like that? I don't know. We had a couple of weird numbers one time we did. 50-day times 350, yeah. 350 daily moving average is kind of what it's akin to. I think we had this up here at some 377. We do 350. I think that's this kind of green looking one. MA4 or EMA4? EMA4. We want to go to the MA4. Not sure why I have 377. Whoops. MA4. Let's go to that. Let's hit the MA4 up. Did that work? Huh. Oh, what? I already have. No way. That what that is? 200 is this one. So how is the? There's a coding problem somewhere. MA4 should be green. Uh, no, not really, Jiggy. I addressed that earlier. I didn't put any weight to it necessarily. Um, you don't. By the time the 50 and the 200-day cross, kind of things are known already. It doesn't really sneak up on you. I'm not sure what's going on here. I'm gonna take this 10-day. I'm gonna make this the 350. There we go. Geez, something's wrong with the code here. So there's the 350 test right there. So we did undercut it and get a bounce here. There was also there's a retest bounce. There's another death cross, because that's what it is. It's a death cross. The 50 and 200. There's a death cross. This one tested again, then bounces back, and then has a very large rally back up into the highs before rolling over again. I mean, is it possible that we get that situation? Yeah, every situation is always possible. Pretty big bounce. So this, I'd argue this bounce is bigger. 22% there, 17-ish% there. About 22%. Even just between there and there, about 22%. Pretty similar. Pretty similar. There's a death cross. Interesting. That's actually is very interesting to me. I have another. I don't think we have many 350 tests. Maybe this one. There's your death cross 350 test. Arguably, you get a rally, a really big rally, and then it rolls over again. And that was not pointing such a good picture. If you go by those moving averages like that, you get the death cross to bounce off the 350. Arguably that would shake a ton of people out. I don't think too many people have the 350 on their charts. That's going to shake a bunch of people out. And that's really what a capitulation is. It's a massive, massive shakeout. Here's maybe another one. This one goes well past. And here you got all these moving averages in the same place. That's interesting. Yeah. So keep in mind what we're doing here. And maybe what I do is different than what other people do. I don't know. So I'm just going to say I look at all these things and I try to think of institutional accumulation and distribution. I don't just look at the moving average crosses and I don't just look at the price action. I think about like I'm looking at these prior formations and I'm trying to see, okay, you know, that's a topping formation, I guess you could call it that because we haven't rallied, right? Been 4 or 5 attempts. Here's one, and then over here's another one. So it's not only the moving averages. Yeah, here's the other one, right around here. It's not only the moving averages. It's what is the action preceding to the moving average action. And we've done some of these, not really off the 350 day, but we've done some of these in the past, and it kind of led to okay, during this circumstance you have to look at that, during that circumstance you have to look at that. All these seem to be after some topping formations. So you kind of get the death cross, the 350 test, they're all after these tops. That's very likely because the 350 is so far down. So there's a top. Yeah, there's the 350 test. There's your death cross. This already kind of topped and rolled down. This situation is interesting because the broadening wedge is actually, according to the good book, like we found out a short time ago, is an accumulation pattern. So this is a unique situation. Maybe this will change. I guess I don't know. I guess we got to see how we do with this high right here at the 70,000 level again. But that is kind of where they just sold it off. But that was also when the Japan carry trade started unwinding. And who knows how that's going? I mean, you really never can know. Yeah, I saw that around. Let me check it. I was just trying to get my thought out. Otherwise, I'll forget about it. Oh, interesting. Bitcoin cycles, banana zone. Some kind of big cup with handle-ish looking things, huh? I'll take it. Yeah. 2011, 2012. Didn't we do something similar to this not too long ago? Like a month or two ago? Before the big rallies we talked about. These are all halvening cycles. That's what this is, a ROM. Remember, these are halvening. That's what we did. The halvening cycle, consolidation, then huge blast off. That's exactly what this is. Yeah, glad to bring it up again. Bring the room back up. I brought it up. I brought it down. You're bringing it back up. I do. And see, I do like to keep a bullish tendency when it comes to these charts because I don't think you can ever get too bearish. Otherwise, you can't believe what happens when it happens. You know what I mean? In all honesty, I would rather just be not involved at all in a bear market than miss this. You know what I mean? If I had to choose one or the other, if the options were be too bullish all the time or too bearish all the time, I'd rather err on too bullish all the time. And I generally do that. But yeah, so this is the halvening cycle. That's what this is. They didn't talk about it here, but the halvenings happen during these consolidations or just before these consolidations. Actually, I think that's implied on my chart. I think it's still on here. Oh, maybe not. Yeah, these three, I must have deleted that other one for somehow. But yeah, so there's the consolidation. I think that's when Bitcoin halvening, and that's when it topped. I think that's what these blue boxes are. Yeah, see? I think that's the halvening date, and I think that's the top. And we used to have one here. I don't know if maybe I didn't. Maybe I didn't have a blue box here. Yeah, we'll get to the second one. I just want to make sure I was thinking straight. So it is, yeah. There's our consolidation box. There's our consolidation box. And the one in 2017, we had several of them. See there? Bop, bop, bop. All right, cool. Yeah, I like the way how that looks really good. Easy to see there. And then what's this one? Bitcoin 3-day. You got RSI trendline breaks. I love trendline. I love trend lines. I have to say, trend lines are my friend. You can use them. They work good on RSI. They probably work good on MACD. They probably work good on my volume aggregation tool. I think I think in secondary indicators, trend lines are definitely underutilized. Everyone's looking for divergences, which is fine. But these trend lines, I really do find them handy. 100%. They often point to some good. It's like after a bottom forms and you start curling up just a little bit, you'll find a RSI trend line break often. And I think it's a little bit more safe than buying the divergence or just buying blindly a bottom on price only. And you're buying a little bit late, but that little bit late provides you with some safety. So you look at this one, it bottoms out, comes up. Here you have a couple of higher lows, and that's where your trend lines fully break right in here. It's pretty cool stuff. And that gets you in before the big move up, or right at the beginning of it. And this one, kind of the same thing. It's a neat little interim. I just noticed this one day about a year and a half ago or whatever. I don't really trade on it, but I always find it super cool. So here's a little declining trend line, right, on the RSI, but price is just doing a bunch of garbage, higher high, lower low. This is nothing. But with the RSI trend line break, boom, that's an entry. It's just about how you use your tools, I think. But yeah, so this one's interesting too. This one also points to an entry. Is that what you're getting at, Aram, here? And then yeah, we got the retest, which you'll often kind of get these retests. And so you're looking at these zones and you're thinking 95 to 102. Yeah, those RSI trendline breaks are neat. I really do like those. But that's on the 3-day. So, pick your spot, pick your poison. Um, that's a 3-day chart though. I don't know. If you use that all the time, I don't really use a 3-day, but this one, the trend line breakout, would not have been fruitful because it ought to use that one probably. And so that actually gets you the breakout right in my alert right there on that particular one. Oh, you could have used another trend line though too if you want to be more aggressive. That one's a nicer one. Get you in there. I like these trend line breaks. I need to do more of this stuff. And see, here's another one. Bam, right there. And that gets you arguably in right there or right there. And maybe we'll form another one or something, who knows. So whatever tool you guys choose to use, you just got to be honest with it and just like time frames are, in my opinion, incredibly important. I really do think, and I don't think that all circumstances work on all time frames. You know what I mean? Like if you have a really super fast breakout, take this for instance. If you're trying to manage this run on the daily, you better be in down here because you have no information here. So your indicators are going to be garbage because it's moving up so fast. You have to use a 1 hour, a 30 minute, whatever the case may be. But you just be honest to those and you learn those. You learn their tendencies. And I mean, if you want to own 5 or 6 time frames and learn all of them, I don't think that's a problem. Just know which one works in what circumstance, you know? And so all that's judgment. 10 minutes. Okay. I'm actually going to I got to go blow my nose. I don't have any tissues in here. I'll be back in about a minute, guys. I got to go find something real quick. All right, I'm back. Feeling much better. So the whole point of technical analysis, which is what we're all here to do, right? We're all here to, everyone says we're here to make money, we're here to do this, we're here to do that. In my opinion, and of course it's the right opinion, is that We're here to learn and understand what the market's going to do, or what is implied within the market structure. And doing all this homework, I think, is incredibly valuable. Incredibly valuable, even if you don't come to a conclusion today. You know, because every single one of these days, barring maybe 2 or 3 of them, I've done a show. Every single one of these days, I've done a show. I've done some analysis. You know, and you guys probably have as well. Just maybe did a show, maybe didn't do a show, but um, did some analysis, trying to do the best that you can, trying to figure if you want to trade, if it's too choppy. Um, and if you look at the lines that I have on my chart, those are the ones that, in my estimation, are the better opportunities. Because part of analysis, it doesn't necessarily lead you to, like today, we can't say when the market's going to go and break the 72 level, right? Like there's nothing I can do today, that will give you any valid information on when that can happen. It would all be conjecture, and you'll forget about it tomorrow anyways. The point of all these exercises is to realize that what the big picture is, what the intermediate picture is, what the small picture is. That's really all there is. There's really nothing else. And it's good to have that historical context. It's good to look at the 350 and the 200 and the 50 death cross. It's good to look at all that stuff. But it doesn't mean it's actionable today. You know what I mean? It doesn't mean that if I say the bottom's in, you go out and buy. It doesn't mean if you think the bottom's in, you go out and buy. You know? Um, it's, in my opinion, it's much more difficult than that. It's not that clean cut. You know what I mean? You have to find the right circumstances, and the right circumstances are few and far between on these charts. So I'm going to talk about this, then I'm going to move on. So you look at like the right circumstances to buy. There's really only a few of them. You got one here. You got one in here somewhere. Got one right there. That could be a good one. That's kind of a good one. There's a good one. There's a good one. There's a good one. Here's a good one. So this is just buying. This isn't shorting. If you're looking to short, right, you got one here. You got probably one there. You got one here, one here, one here. This is a tough one, but there. That's a good one. That one's tough. That one's tough. That one's probably a good one too. With the two toppings just on this chart, not going back too far. People don't realize that normally this is around the time Bitcoin pumps post halving. Yeah, so it's again just trying to find one of these circles. You got the circles and the lines. The lines are like your good shorting opportunities. The circles are your good longing opportunities. There's a couple more little ones in here, like smaller consolidations, but this goes back to 2020, right? So I actually got to put one more in here. This is a good one too, and this was a good one. So since 2020, 1, 2, 3, 4, 5, 6, 7, 8, 9 really good chances to get in, to think you're going to do something, right? I think that's really the picture here. I really do. And then in terms of shorting or selling, 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7, 8. So pretty even on the buying and the selling side. So all we're trying to ascertain is that, are we coming to a circle point or not? Are we coming to a lined point or not? And the rest of this is just choppy garbage. You know what I mean? Here you're looking at reversal, it fails. All these other opportunities that never do anything, they're just failure points. So really all we're trying to do is ascertain if it's a failure point or if it's like a really, really good point. That's really about it. And I don't think there's anyway, I just felt like saying something like that. So if that makes sense, good. If not, I'm sorry. Yeah. That's really all we try to do. We just try to ascertain, whether the market's going to be bullish or bearish in the near term based on our intermediate picture and our bigger picture. And so right now we're looking for those signatures, in my opinion. Right now, based on this bottom, I think you're looking for those next good entries prior to the breakout. And to Midwest Picker's point, I think he's correct. I think that we're after the halvening. We just looked at those other cycles too, broadening wedge formation. So maybe we'll buck this death cross 350 thing, and we'll go on onto bigger and better things. So we start consolidating up here under 70K. I think that's ideal, and I think that's one of those circle opportunities where I think you got to pay good attention and try to really get in, because this is behind us at this point. Now, if we come back down, then it's a different ball game. It's a whole different ball game, right? So we need to see some better price action going forward. That's pretty much what I'm trying to say. And that took me 41 minutes. Okay. Let's go down the top 20. We'll look at the USD coins, and then we'll do some stocks, and then we'll get out of here. All right, Ethereum looks like absolute dog trash. I don't know why I just put those two words together. They don't make a lot of sense together, but I hope you understand my meaning. Yeah, I do not know what's going on here, but ETH does not look very good at all. Solana, I think, is going to supplant Ethereum at some point, just by price action. I mean, look how good Solana looks. Look at this beautiful move up. Look how nice and high and tight this consolidation is. And then Ethereum, unfortunately, isn't really able to pull itself back up. That's a bit of a problem. I have seen some news articles lately regarding Ethereum and waning network usage, and a lot of it going to Solana. I didn't read those myself, just kind of took some people's word on it, but I don't know. I'm not a big fan of the situation. Now, Ethereum will probably come back if BTC starts to get stronger, but if Ethereum is a true leader, which arguably it still is, being number 2 in market cap, and by quite a wide margin, it's not like it's small. 313 to 75 for BNB to 71 for Solana. So it's definitely the leader in terms of market cap. Like there's people are heavily invested in Ethereum. That may not change anytime soon, but it could suffer from I'm not sure there's a term for this, but like a dying leader could suffer from that. So I think that's going to be a tricky situation for people that like Ethereum going forward. But on the short term, let's bring in the 2 hour. And so here we have, you got Bitcoin's flag. I think looks a little bit nicer than Ethereum's flag, in my estimation. It'll probably move in concert though with BTC moves. Just not so sure how much. Lately it's actually kind of underperformed BTC, which is strange. All right, BNB here, I think here looks really good. Get a nice little flagpole, 521 alert level. Could try to bounce back. Maybe we bounce and fail. That's always fully possible here. Also with a big capitulation candle, we're all going to have this declining volume signature up here, which I don't think is a huge issue as long as we break out with gusto from one of these. This was not a great breakout, but it wasn't horrible. But this one, I think we need to get some momentum, because I think this is an actual 2 hour cup and handle. It's small. Maybe it doesn't work, but I think it needs to break out. So speaking of breakdown points earlier, on the 2 hour, this is also a breakdown point level here, right? Boom, boom. On the daily, you're looking all the way up here to my other alert at the 587. So if we can get through here, get up here, then get through that, that would be big. That shows a lot of fight. If it doesn't happen, it doesn't show fight, and we'll probably just have a good-looking pattern that dies. All right, Solana, putting in not such a great-looking pattern. Right here, it's there's no cup structure to it. We undercut some little lows here. Pretty lackadaisical, really, in the past 24 hours. So being our leader, maybe that's showing us that it isn't going to do anything, but it's also all the way back up towards this kind of declining trendline situation here. And we have a 167.92 alert. So, Solana, I think, is one you should always eyeball. Solana and BTC, I think, for leadership. And then ones like BNB that have decent little setups, these should start to break out. You're looking not just for one chart to go, you're looking for 2 and 3 and 4 charts to go. I think that's the key here. And if Solana can stay stable or even rally, that's ideal. All right, XRP with not a bad day today, 2.3%. This has actually been a little bit more bullish lately. Rallied here pretty good. Unfortunately, sold off quite a bit, but then bounced back really well. Unfortunately, stalled at about the same level. So you're just looking for follow through at this point. Gave it a shot here at the 62.68. Didn't do it. Now we're hoping it can get back up there. So not a lot going on here in XRP. TON able to rally back pretty big the other day. got back above a breakdown point kind of thing here, stalling at the top of the breakdown point here. And but just the ability to get up here shows definitely some interest in this token. And look at the volume signatures. So this is kind of back on the look at this a little bit more closely list. And what's it do in 2 hour? Kind of a cup and handle. You don't want the handle to be above the left side of the cup though, which this one is. So definitely a flaw in that regard. But if we can move up regardless, then it doesn't matter. Dogecoin looking a little better. Looking a little more like BTC. Not as good as BNB. It isn't quite as high up here compared to yesterday's open, which is where our consolidations are. But we'll see what happens over the weekend. We could get a nice pop up here, and that would be good. Cardano also not looking too bad. Not looking too bad here, but big picture isn't looking too good. This is not led at all. This has been an absolute dog since it went live, which is like way the F up here. I think it's right there. Yeah, that like 2 days after that, maybe the day of the top, the thing went live. It's been just sold off ever since. So, a little bit like anticipation is better than the real thing, especially with stuff like this. Shiba Swap, not a bad flag here. Did show some stalling action there. Hopefully we can get back to that, but there's no trade there until that breaks up, and that goes for pretty much all of these. There's no trade until it breaks up. AVAX, similar situation. Better little cup. If this bounces up on some decent little volume, you get a nice cup and handle here, that would be really cool. And that would be something to buy off of. If you want to get this coming out of this low, you kind of have to buy above here. Or if you just want to arbitrarily buy just because we're low and put your stop down here at 2%, I guess. Not my favorite thing to do, but sometimes when you're low like this, maybe take a half position, then it's like a 1% stop loss. You can do that all day long. You can take 5 of those and really not have any problems. And then if 2 of them work out, it'll pay for all the losers substantially. Tron continuing with this kind of weird uptrend thing it's been doing, kind of vis-a-vis some of these other moves it's had, just kind of for no rhyme or reason. Does anyone know why Tron has really changed its behavior? I don't understand these dynamics. I'm just curious because I'm live. Maybe if somebody, or public, if somebody else knows something I don't. But this is kind of a frozen rope situation. Just kind of goes up until it doesn't. I chose the close here instead of the wicks because, I mean, the angle here is very clear. Like, that's the angle. So what I try to be as parallel to that as I can. Probably right there. I'll go to that. So that's kind of your supportive trend line for this. And you can arguably duplicate this and drop it on some high. And there's your pattern there. So whenever that fails or breaks out, some of those can break out. Most of the time, though, they fail. DOT, not as good a pattern, but I'm not mad with sideways. It's a little bit blocky right here. It's kind of weird, but I'm not a huge fan of that. DOT's been kind of trash lately anyways. Able to rally back pretty good, though. Breakdown point here. Daily breakdown point's way the hell up here. So we'll see if it's going to bounce up again. You could pick any high here to buy off of if we get some volume influx. Bitcoin Cash, starting to put in what could be a handle for a cup and handle. You could argue that's a buy point right there at the 359.10. And this has been able to put together some decent attempts at breakouts. So maybe this will have a go. I think that's probably the next level right now. That's a nice little cup. Chainlink, similar but not as clean. Bitcoin Cash is pretty clean. The one negative to all of this, and again, I do like to keep a bullish tendency, but the one negative is that we're still below all these breakdown points by a wide margin. You will often see markets consolidate and start to look good and then roll over, and then you realize, oh, it's just a consolidation. We were well below breakdown points. And, not to dampen on the day, but that's kind of where we're at. We're kind of in these situations, and this kind of paints that picture pretty well on Chainlink. Is that, oh yeah, we look okay here, but you can look okay and die. 100%. Every good-looking person on this earth that's dead right now has died. I only put that caveat on it because there's some really good looking live people. But you get my point. You get my point. Every good looking person dies. Every good looking chart doesn't have to work either. But this is, I think, a good example of that. It's down in pretty low levels. We're underneath all these different lows. Even if you want to go back here to 23, I guess you could argue we're above those. But you get my point. You get my point. If all these start to fail after these breakouts, you just have to exit the market. Um, if they rally through, you can add to positions, but if they don't, we're going to just have to exit. Midwest Picker, I just don't think ETH going proof of stake helped them. Also, Sol is cheaper for people to trade meme coins. Yeah, and that goes to network usage, right? The whole thing about crypto, and everyone's chosen sides at this point. For the most point, for the most part, everyone's chosen sides, and they're not going to deviate from their sides because that would make them wrong. And God forbid we be wrong as human beings, right? So they're going to die on their Ethereum horse. They're going to die on their Solana horse. That's just the way it's going to be. Just the way it's going to be. Me, I don't have any biases. I don't care at all. All right, so Near Protocol on the 2 hour, again, breakdown point, trying to move up from that. I think that would be good. We need some volume. That would be ideal on that one. You've got Matic, similar situation. The whole market kind of looks like this, forming some type of cup or declining situation. And hopefully we break out from these. Litecoin, similar. I'm not going to harp all these to death. ICP, different. Still looks like garbage in the consolidation. So this looks a little bit different. I guess you could probably argue there's some type of declining. We shall see. Leo. Sucks. Uniswap. Another one. So I could have put a bunch of alerts on here today. I'm not going to. There's just too many. And it's just going to inundate everybody if they go up. And if they fail, we're just going to be triggered for the next week and a half. So let's look at the USD coins. I'm going to go down these very quickly because they all look very similar. We're just going to look at the 2 hour time. Some of these, though, look better than others. I think 1 inch looks okay. It's not on the newsletter, but Aave doesn't look super good. I don't like how that's just declining the whole time. It's not bad though. If you get a good volume spike, I like anything. It all comes down to volume spikes, right? So Algo this is on the newsletter. Really, really low volume here as we're wedging up. This is good price action in my opinion. You start wedging up like this, coming out of this, you're starting to try to look for highs. Again, no alert, but I think that one is a good one. Algorand. Ampere not so bad. I don't like all the wicks. Also not a leader. Algo can lead, kind of. Band here, nothing crazy. Bat, kind of random. Bitcoin Cash, talk about that with the cup and the handle. Cake itself, not bad. Not bad. Cake coming back would be good for the markets. Pancake swap. That would be good for the markets. It's back up above this low, so this one's not super bad. Also, some breakdown points to contend with. Need some volume, though, to really push it up. CFX, not too bad. Pretty flat here yesterday and into today on the 2 hour. I'm mainly looking on the chart on the left, the 2 hour time frame. And I'm going to go fairly quick here because there's a bunch of coins here. I do like the flat action on those. Dash, a little too random, roundy too. EGLD, trying to come back the 2 hour, the prior candle. Right now we're holding like we could try to break out of this. EGLD can have some good moves. If you don't know that, go look at his history. 1430 for ENJ. This is on the newsletter. This could be a nice little breakout. This is a full-blown cup and handle at this point. So let's see if it can get the job done. Another thing about this one, too, is the high or low here. I kind of like the way this looks. VA tool doesn't look very good, but the chart looks pretty good. EOS, pretty good cup and handle. It's forming right there on the 2 hour. Ethereum Classic. It tends to move later and with other tokens, namely Ethereum, so we'll see how that goes. Fetch doesn't look super hot, kind of living on the ground there. Filecoin living a little bit higher, that's good. On the daily, you can see it had a good day a couple days ago. Beautiful separation from that low consolidation. And then now we're having a small flag on the daily. So this looks pretty good. Phantom trying to go for it early. Look at this did have some volume step in. That's not too bad. It's not amazing, but it's not too bad. I'm not going to zoom in because I like this look as I go through these charts, but we are pulling back here already. It's a little bit not of a good sign. The volume's already a little bit high in the pullback. That may be our future. Gala's not really getting off the floor there. GRT not too bad, not too good, although at some point it's going to try to rally. H-bar pulling back in. Look at the daily. It tried to pull up 3 days ago. It's already coming back in fairly substantially. But on the 2 hour, if it could round that bottom, I'll start to move up. This could be a low stop entry. ICP, not very good. ICX, not very good. Very illiquid token. Look at the 2 hour. You see just a bunch of hash marks. That means there's not a lot of trading activities. You don't want to be involved in that anyways. ID, also trying to break out right now. Also having a little bit of a tough time. Injective of 5%. So this already tried to break out. So this is what we're talking about. Here's a cup and handle. Here's a breakout. You get a retest. You're back up. So this is not a bad situation. It's really not. R size, no divergences here. Yeah, nothing big, but if you want to go with it, your stop loss is down here underneath this wick. You could try to make it underneath this candle, which brings your stop loss up higher. I don't know, 7% stop loss in this market environment. You do a half position, so it's only a 3.5% stop loss. You really should be more worried about losing money than making not enough. And that's a big trap for every trader in existence, at least at some point in time. They always are more worried about how much money they're not going to make than how much money they're going to lose. So you need to flip pretty much everything you feel on your head to kind of be successful at this thing. But injective. So this is what we're hoping for. This is looking a little better. Near protocol trying to move up a little bit there. Not too bad. 2 pocket pivots on the 2 hour time frame. So that's kind of what you want to see. Hopefully we'll get a reversal out of that. So we are at a point where we're going to start testing to move higher. IOTA, I haven't been through these coins yet, so I don't know what the heck's going on down here. I stopped it. That last one I had an alert on, which was whichever one it was. Not too bad here for IOTA, but this thing sucks. And Kava. Kava doesn't suck. It sucked lately. Look at the daily. It's atrocious. I'm not sure if I'd even touch that one. Clay also not so good. Pretty good on the 2 hour though. It's up pretty high. It's already passed a lot of breakdown points on the 2 hour. So we'll see if we're able to rally up past there. Kyber Network is KNC. KSM. Definitely needs a big pocket pivot. A big pocket pivot. Neo. NTRN. Not really a high. I think I want to eliminate these low float tokens from my list altogether, actually. Harmony hasn't really bounced back. This one can move, though, but it's proven on the daily that it's happily going lower. Good little capitulation, though, but it doesn't mean we're going to move on up. But the 2 hours is good. If you can find a good stop loss, you see a good pocket pivot, you can manage that one. Ontology. Interesting. Not a lot of volume here. Not sure I'll jump on it. Qtum. Also kind of wedging up with no volume. Not a great sign. If a seller comes in, if a big seller comes in noticing that, they could kill your trade in a heartbeat. Rune with a cup and handle on the 2 hour time frame. Not too bad. Daily, able to have a little bit more rallies, so this may be worth a go. You find a good stop loss under the handle, which on the 2 hour actually is really, really manageable. So if it does start to break out, your stop loss is going to be really tight. Like a 3% stop loss, maybe a little bit, maybe a tiny bit more than 3%. But that's pretty good if that can go. Again, a good pocket pivot in Rune could go a long way. Ravencoin, not really great formation, but it's okay. Sushi Swap, 2 pocket pivots. 2 pocket pivots on the 2 hour time frame trying to break out. So we are already seeing a few breakouts, but nothing really rallying tremendously. Theta token, I don't like the look of that one. It's a little bit sloppy on the right hand side. Uni sucks. WLD is a little bit weak on the right side. That's not very good. Stellar had a really good volume candle the other day. I didn't point it out on the newsletter, but it's pretty good coming up out of those lows. Let's see what it can do if it can get above. If it can get, but look at the daily. What a good move straight up from like 78. Now we're at 10. 100. So that's pretty good. A follow through here could be good. Again, volume is going to be your key, a good pocket pivot. Does anyone not know what a pocket pivot is? Because I sure am saying it a lot. I just want to make sure everybody knows what a pocket pivot is. And then a good pocket pivot. A pocket pivot is just volume, and a good pocket pivot is lots of volume. So, but if anyone doesn't know what that is, I'll explain it. XNO, pattern's a little bit short. Not a huge fan of that one. Haven't seen it really do good. Tezos can do good, but hasn't really. XVS, not that great of a pattern. Zcash, look at that thing. What? It broke out? Wow. I didn't notice that yesterday. This actually had a breakout. And it was so good I moved my charts like I said I didn't want to do. But look at that. So here's a leader, ladies and gentlemen. It's the new Bitcoin, Zcash. Maybe it's the one that Putin's using now. I don't know. But look at the volume stepping in here. Very interesting. Great volume here. Great consolidation. Definitely chopped through my alert level here. Chopped it to death. And then I kind of forgot about it. I guess it broke out. Holy crap. I did not realize that. My chart must have been in a... Sometimes when I go through the charts, it's zoomed in a weird way and I miss some of that context. And that's probably what happened here. But that is amazing. This is one I think you could try to go with. It's already on the move up. Not a lot of coins are doing this. So far, from what we've seen, none are. That's a great move. This is a nice little flag. You could draw a trend line across here. That could be an entry. Ideally, get supported by this trend line. Zen. I got to make my chart look good again. There we go. Something like that. All right. I'm assuming everybody knows what a pocket pivot is. If you know what a pocket pivot is, smash the like button. That's funny. Zen Horizon here with a cup and handle. A pretty good one, too. Let's see. It's not great. Volume's in the wrong spot for the handle, but pretty choppy. But it does have some potential for some up moves. Let's see what it can do. Zill trying to leg up. That one you just have to find a stop loss if you want to go with that one. It's not moving up dramatically, though. So far, nothing really hugely standing out other than that other one that I already forgot its name. What's that? That was the X one. XTZ? No. What the hell one did I just see that was on? Oh, Zcash, yeah. Zcash. Other than Zcash, which is different than every other coin in the whole market. ZRX. Loosely finding resistance here at this 31-cent level. It needs to get above that. Again, good pocket pivot. This is prone for a breakout. This is a larger cup and handle. And not a horrible one. So this, I think you could put on a short list as well. What up, Brandon? Yeah, I'm almost done with these. I'll do that in a second, Brandon. Dead Cat Bounce on the ES and SPX Daily. Is that in his encyclopedia, the first edition? Does he have Dead Cat Bounce in there? I did not know that. I think I have the second book downloaded on this computer, actually. So I can look it up even if it's in the second edition or whatever it's called. KCS, bunch of garbage. Caspa with an alert at 1731. Here's another cup and handle, and it's been so. Oh, thanks, man. You even gave me the page number. You're the man. Yeah, we'll definitely do that after this. And then, so Caspa's not bad either. I put that on a short list. Caspa's been able to hold up really well. Broke here, bottomed. Let's see if it can come back. And then Ace is a bunch of trash. Okay, yeah, let me get the good book out again. Wow, 2 days for chart pattern, for the Encyclopedia of Chart Patterns. I feel happy. Well, I didn't know either until I saw I was live today. And I'm like, yeah, that's okay. I'll just go live today. How you doing, Ted? Long time no see, bud. How are you? 829. This book don't even have an 829. Oh, second edition. I missed that. I just saw the 829, and then you put second edition. Now I gotta find it. Now I gotta find it. So the oh, what's up, Aram? You didn't miss too much. I think at the end, what we figured out was that Casper looks pretty good, Zcash is excellent, and everything else is kind of wait and see if it has a pocket pivot. I don't really remember a lot other than that, to be honest with you. So my computer died a couple months ago, maybe a month ago, and I was able to take all my old hard drives because I think it was, I forget what died, but I'm not sure what died actually. I didn't like test it. It's still sitting over here in my closet. I was able to get all my old hard drives and put them in. So in my new computer, I got 4 hard drives. And so in my, trying to figure out where I put it, I gotta find it now. I gotta find it now. I think it's in my mass storage, data recovery. I gotta try to find it. But I really want to look that up. So I think we're done with crypto, guys. I know a lot of you guys are here just for crypto, and that's fine. I don't hate you too much for that. Um, just joking. But we're gonna move on to some stocks. Unless you guys do have any, specific questions, shout them out. We'll go through some charts if you guys have something. Um, oh, it's funny. I'll show you in my. I don't know if you can see it, but I put a folder in here. I don't know why, because I'm pretty darn sarcastic. I don't know if y'all know that, but I'm like really sarcastic. So I put a thing called a folder called "Definitely Not Porn" in here. And if you open it up, it says, "I told you it's not porn, sicko." Apparently, I did that 4 years ago. So yeah, I don't know why I just showed you that. I just think it's hilarious. And since nobody will ever see it, I show it randomly to people just because I think I'm funny, even though I'm probably not. I think I'm hilarious. Okay, so what the hell was I looking for again? I need to go through this whole freaking thing. I just have way too much. I have I seriously probably have like 500 folders in here it could be in. I don't remember where I put it. It could be in my old, so I even brought over my old C drive. It could be in my old C drive in my downloads. Let me look over there because I don't see it in my mass storage. You know what? Let me just search it. Let's go search for the word patterns. Let's see what it pops up. I'll probably open up another folder and then go into. Um, I'm doing this off screen so you guys can't see it. If you guys really want to watch me traverse my computer, I guess I'll show you, but probably be pretty boring. Okay, old C drive, users, downloads, downloads. Maybe Bukowski. Ah, it is in here. I think I found it. Oh, Encyclopedia of Candlesticks, Chart Patterns, 2021. Is this it? Oh yeah, 1,300 pages. Holy bejesus. Hey, I found it, guys. Now I can put this on my. It's what, 30 megabytes? Now I can put this on my actual computer. I'll put it on my desktop. Can I paste? Haha. Okay, now it's on my desktop. Look how fancy I am. All right. Hey, look at that. We survived. Is it 8:31? It's got to index this whole darn thing. Oh, there we go. Okay. Yeah, it's a great book, Brandon. Yeah. If I'm not perfect, if nothing else, I know some good resources. If nothing else. Yeah. At least I'm not a huge douchebag, right? That's a good thing. I don't know what I am. At least one of them's not a huge douchebag. 8:31? 8:30. Roof inverted? Yeah, maybe it's a different. Okay, let me just go to you just go all the way to the whatever it's called. I forget. Table of contents, I guess. Oh, it's the third edition. Oh, you're in the second edition. Oh, I don't know if I have that one. Wait, is this the second edition? You said third edition. Make up your mind, Bukowski. Or maybe it's both of them. Oh. I was going to get page down. Okay, so you're looking at, what's it called? Dead Cat Bounce. I don't see a Dead Cat Bounce here. Oh, he's got Gartley's in here. What? Don't tell Mel. Mel will come back. Oh, 2005? Shoot, I don't have that one. We'll see if I can illegally download it off the internet. Encyclopedia of Chart Patterns, 2005. Because I definitely want to see that. And you know what? We were gonna go through. We're still gonna go through stocks today at some point. Here we go. Oh, it's Amazon. If you ever want to try to find a book, you just type the name of the book, PDF download. You usually get pretty good results. That's how I found the one that I found. And then I own the actual physical book of the first edition because I bought it a long time ago. And I would buy it, but I want to look at it right now. Oh, 1 of 10. That's not good. How do I get the book? Downloads 8. That's funny. Cart PDF free. I don't know. The PDF version? I don't trust all these darn sites that do this crap. I mean, I really gotta make money. I'd rather just give them like $10 or something. All right. So, Bulkowski website. I don't remember what it is. The pattern site. Okay. He's got some good stuff on the site too. I probably should just buy every one of his books and then just sit and read all of them. Oh, book corrections. He's got a lot of books. It's not the getting started in chart patterns, is it? That's the only second edition I see here. Invest for 2 Commonwealth. Seems like it's a advertisement. Is this just an advertisement? What the hell is this? Encyclopedia, a third edition. Getting started in chart patterns. Is it getting started in chart patterns? Damn it. Now I'm starting to get annoyed. Oh, okay. Well, I want to read it in his book. He gives a lot of great context in the book. Tab takes you all the patterns. Google Bukowski dead cat bounce. Okay. Yeah, it's definitely dead cat bounce. Man, all these ads. Jeez. Like I know the guy's got to make money, but they they do such a good job of not even trying to get you to realize what you're reading. It's a bunch of trash. Oh, second edition. There's a link to the book. I hate them. I hate them. Like if you're gonna go through all the purpose of doing this, make it readable for fuck's sake. Like I mean I get it, Bukowski, but still, does he have a? I'll just pay him for his damn stuff. All right, so what are you looking at here? You think the S&P? You think we're dead cat bouncing the S&P? Let's move over to stocks. Yeah, so I actually had that thought as well. If you look at these indexes, I have trend lines on all of them. We're not even near the trend lines. Also, volume's declining as we're kind of going up. Um, I'm not super happy with that, to be honest with you. Not super happy with that. Now, again, I talked a lot about this last week, actually. Um, at least I think we did. Didn't we, Rom? I don't know. So I'm looking at a lot of socks. Like socks is a good example. You got like a little wedge here, a little rising wedge on kind of lower volume. Not even filling the gaps quite yet. Declining trend lines aren't. And this is Soxel. This isn't. Sorry, this is what I like to. I want to jump back into Soxel because this is a lot more volatile. So if you can time it correctly, you can do really well. But yeah, I'm not really happy generally with what the market's doing. Now, and that's not a bad thing. It just means it's actually kind of neat because eventually we're going to get to a point where we have some amazing buys and can just make gobs and gobs of money like that. I want to see if Dead Cat bounces in this encyclopedia though. Give me 1 second. Dead Cat. Yeah, it's not in there. So, okay, so let's see here. Let's look through the Dead Cat bounces. I'm just going to read in my head here a little bit. Based on hundreds of perfect trades, the Dead Cat bounce is the name of this event pattern. Price makes a dramatic drop, averaging 30% before bouncing only to resume a decline at a more leisurely rate. So the indexes are going to be different. You're not going to have that 30%, obviously. But you could have something like an NVIDIA or, he's talking about an individual stock. So that's a 32% bounce. Here's kind of a leisurely rise. Identification guideline. Okay, so he does give you a little glossary here, I guess. So there's the event decline, event trend low, bounce high, post bounce low. 31% drop in 7 days. NVIDIA doesn't qualify for that. Trend low. 28% bounce rise in 23 days. Post bounce decline. 30% in 49 days. Okay. So you can see it's boom and then just a slow erosion. November for what? I don't understand that particular context. Okay. Dead Cat Bounce trading tips. I released a trading setup based on new research using Dead Cat Bounce that may interest you. Is this just where we're at? Oh, new research. Oh, fancy. This is interesting. Good stuff here, Brandon. Thanks, bro. So you may find the graphic on the right helpful to following the discussion, but I'll explain it later in the trading setup. So event declined 41% to 46%. That's kind of weird. Day 7, you buy the undercut of day 7, and then you sell on day 42. That sounds horrible. Okay, how kind of crap is that? $10 commission per trade. What are you doing this shit in the 70s? Jeez. 11-cent SEC fee. Yeah, you're going too deep into the weeds there, man. I'm just reading this paragraph right here. I exited from 1 to 44 trading days later, and the table shows the results. Oh, that seems highly retarded. So your best day entry was the low of day 7, and then you sold on day 42. What? And only half of them are profitable. How are you going to hold something with no stop loss? This has got to be the dumbest thing I've ever seen. Samples, only like 2 dozen samples. Yeah, I don't like this trait. I don't like that at all. All right, let's just go by this. That seems like a bunch of trash. This is more normalized, right? Like just so the larger the day event decline, or the larger the event day decline, the larger the bounce, and the longer it takes for the price to reach the bounce high. Yeah, that can be accurate. I've seen that. If you own the stock, wait for the bounce to peak and then sell. So I was thinking about that on Friday, but I didn't. My wife still has some money in the markets. Swing traders can buy near the event trend low, right here, and ride price up or still it peaks the bounce phase. Only try this in the event day decline is large, say 1 day over 30%. Event losses from the close the day before the event to the trend close above the median 20% decline. Average bounce is 35% in 25 days. Those below the median bounce 22% and it took 20 days. I'd argue probably like cut this by 10%, like a factor of 10 for index maybe. I don't know. I'm going to read that one real quick. So in this example, Amazon gapped 25% lower. The next day, price made a lower low and then started a recovery. It bounced upward for a week and then turned lower, and prices finally began a recovery. It bottomed 66% below the day before the earnings announcement. So there. Yeah, these are all pretty old examples, though. That's funny. Never use a big word where diminutive ones will suffice. He just contradicted himself instantly. That's funny. Okay, enough of that. Let's look at the chart. The market makers pinned the ES price at max pain for both puts and calls on Friday. Go the bulls to buy bullish calls for next week, soaked up liquidity into close, and it started drifting lower. Yeah, how did you derive that max pain? Is there um is there some metric or some chart or something you can? Because I do like that situation. That could be a tradable situation, especially after an event. Because arguably, this was an event. Gamma. Can you explain a little more? How does gamma show you max pain? You can see the put call spreads. I guess I've never viewed it like that before. But I know what you're talking about. Yeah, market makers, it's their job really is to provide liquidity and make a shit ton of money. So they do um, play games like that. So generally, though, this is a declining wedge or a rising wedge with declining volume. So if I were to pull out the original Bukowski book, rising, let me do this one here, rising wedge. See if it's in here. Rising wedge, break, break even, failure rate, average rise, volume trend downward, throwback 72%. Yeah, so that's a rising wedge. It should break down. So he's talking about larger rising wedges, though. Yeah, so here's a smaller one. 1, 2, 3, 4, 5 breakout. 1, 2, 3, 4, 5 breakout pullback. So this is definitely a small one. 1, 2, 3, 4, 5 breakdown. Could be coming up after three tops. This has multiple tops. So yeah, we'll see how this goes. Could be though. So we're in an interesting time. A few times a year you get macro signals, and this is one of those times. I think. Um, Nvidia's topped. Nvidia's our market leader, so I kind of view everything through the lens of the market leader. Now, this is not pulled back. I think this is my 50-day. Just double check because we were messing with it earlier. No, 50's in purple. Oh, so there's the 50. Where's my? Oh, I used it. I used my 21 as the 350. I gotta move my 21 back. Sorry, guys. That's why I'm all thrown off here. What's the 10? Okay, so we are through the 50 day. So we're through the 50 day. So that right there for me implies that the market is already in a kind of a corrective phase. Maybe not a correction, but it sure isn't necessarily going to be uptrending with Nvidia, the market leader, under the 50 day. Okay, and then about a week later it tested the 50 day here and then rolled back down. Had a quite substantial move lower. Now it's consolidating. Okay, so in this circumstance, I'm just waiting and seeing what the market's doing because I don't know if this is going to go down further or come back up. I really have no idea. It's not my job. A lot of people think as we try to do market timing, our job is to know these things. Our job isn't to know. Our job is to observe. Our job is to observe, and then when we observe bullish price action and other things kind of coalesce into bullish action, then we take action. Our job isn't to try to time every single up and down of the market. You know what I mean? You kind of have to just go to your skill set. What is your skill set that you've proven that you can be profitable with? And that's pretty much what you do all the time, over and over again. If you want to try to get another set of skills, you can do that. But so for me, um, looking again, Nvidia as the market leader, this is not good price action. It's just not good price action yet. I mean, is there a possible bottom? Yes, but look at the volume on this. There's been definitely a lot more candles with higher volume on it. Definitely. It is holding up a little bit okay, but it's not a rally. Could be a dead cat bounce as Brandon implied, right? And as we just saw, you have a down move. This one isn't super extreme in terms of time, but did move down 23%. And as Bukowski said, the deeper the move, the more long, usually the longer it takes for the bounce to play out. This one was only 3 days. I mean, if you want to count this as the bounce or the drop, there's 30% in 25 days, which I think would probably, um, yeah, there's a SOT right there, 35%. Yeah. So 30%, 31% in 7 days, which we don't quite get that, not in 7 days, but we do get 23% in 3 days. That's not bad, right? little dead cat bounce. Then you can see if you try to roll over again. So, but then you also have earnings coming up here on the 28th. So, that could gap us up and put us back into a bull market right there. But do I want to bet on that beforehand? No, I don't. I think that's very, very foolish. If we could bounce up in here and do good, then gap up into highs and get going again. That could happen. And I'd love to buy up here. But I think it's really hard to try to buy down here, especially with my strategy. So my options trading strategy. Really difficult. So the market leader's floundering, and then you look at the indexes, and they're basically doing almost the exact same thing. Came down high volume, but not too high. It's a form of capitulation, but I mean, this day was barely lower than that volume. This day was higher. This day was higher. This day was higher, or close to, and not quite higher. But you can see it's not like the biggest volume in the world. And so right now we're playing around to see what the market's going to do. Obviously, Aram and I have been talking. He talks about they're there. He says they're talking about recession. They are. They've been talking about recession for like a year and a half now, and it doesn't really matter. One thing I did want to do actually was look at the markets last 10 recessions. I type 20. That's okay. Okay, this is what I want right here. I want the recession chart, and I want to see what the market does. Investopedia, there you go. Okay, so we got a quick recession in 2020 at the very beginning, I guess. NBER dated recessions, whatever that means. So the very beginning of 2020, that was the last recession. This was just fear right there. Not sure if there's dates associated with this. Oh, here we go. There are dates associated with it. Do recessions always coincide with a bear market? A bear market is commonly defined sustained 20% drop or more from market peak. Of the 25 bear markets since 1920, 14 have overlapped with recessions. Would have to be some cure for cancer earnings, but it would definitely be bullish if we took that route. If I have learned one thing, the markets punish everyone equally before it makes its real move. Yeah, that's pretty much true. That's why I'm pretty much, mostly cash, because I don't want to be punished at all. But this is what I do want to look through. I do want to look through. Let's just go through. Let's go through these last couple of recessions. September 2018 to December 2018. So that was a recession, and that was a downtrend. So they nailed that one. It's not an NBER recession, whatever the hell that is. What's an NBER recession? Significant decline in economic activity spread across the economy and lasts more than a few months. That's a weird. Recession is defined as 2 consecutive quarters of GDP. Okay. We're just going to go by this and just see what we get. Oh, where's that chart? So September to December, let's take a look at that time period. This does end up in a capitulative move. Volume actually really wasn't super heavy. Oh, that goes into. Oh, I remember this. William O'Neill called market follow through day on there's a uh there was a day market was in correction and he called a follow through day like on day 3. like this day. I think this is the day. I've been searching for this. I think William O'Neill called a follow-through day on December 27th, 2018. I'm writing this shit down because I forgot about this. And I wanted to look into this. And I actually asked one of the IBD guys about it. I think through an email or something. I got a correspondence coming with one of them. So I was pissed about something that I asked him this question. He said William O'Neill was always way too bullish. And that's why he caught every follow-through day. And I didn't view that as a bad thing. So I'm going to write this down real quick. I wanted to find the paper. I think it's this one. And I remember it because it was right before the new year. I don't know, for some reason that's why I remember it. It was right before the new year. But I thought that was super cool. I'm going to have to find that. Third day fall. So he manually overrode his own system, which I find fascinating. Those are the things that I want to know about. So, okay. So he called a follow through day on this third day because, market reversal, hammer candle, volume higher than the previous day. Although it wasn't maybe it was this day. I don't know. But that wasn't right. I don't know, one of these days. Maybe it wasn't that one. Maybe I'll never find that day, but I've been searching for it. Anyways, let's look at this one. So, had a big decline. Maybe we're around here. We don't know. Came down 10%. We can look at this intraday decline. Down 17%. We've already had a couple of legs, it looks like. So there's 14%, there's 16%. You get these dead cat bounces on lower volume. U.S. market's been buying the dips and the Japanese market's been selling into them overnight. Interesting. Just on the futures, or where are you noticing that? Oh, you're talking about the Japan carry trade. Yeah, see that's one of the X factors here is that trade's been going on for 15 years. So how can they unwind that in a week? So T.S. Lombard estimates the yen carry trade at $1.1 trillion. So this is still a thing. I mean, I don't think it's over in just a week, and this could maybe put us into that recession or exacerbate us into further into the correction. Yeah, they try to put a number on it because that's what I've always wondered. How big is this trade, and then how fast can you liquidate that? Yeah, past 18 months or so, 1.1 trillion accumulated over the past 18 months. So the other question is how much have they distributed of that 1.1 trillion? It that amount was equivalent to all short-term borrowing in Japanese repo and securities lending by foreign investors since the end of 22. It also includes all foreign securities purchased by Japanese buyers, with the assumption that these trades were financed with borrowed yen. This number represents a ceiling, but foreign investors engaging in short-term borrowing from Japanese securities dealers represent most of the total. It strongly suggests that most, if not the entire amount, could account for the carry trade. Uh, dovish dovish rhetoric from the top Japanese central banker has helped calm the yen. The dollar was up 2% against the yen. Still, the sheer size of the trade likely means a substantial portion of it must still be unwound. So, yeah, that's the most important sentence. And this was 3 days ago. 3 days ago. So that's the problem with this whole scenario. And I'm actually kind of writing. I'm kind of writing. Uh, it's not a book, but I'm just kind of writing my thoughts on the market down, and a lot of it has to do with this bigger picture and what does the market want right now. Like that's what I'm talking about at the moment is macroeconomics and how to account for it in your trading, and that's really a big part of it. And right now, it wants to see this trade go away, is what it wants to see. And then it wants to see because that's the current weight on the market's head, and then it wants to see, better employment numbers, better inflation numbers, or because I don't. And there's another theory too, is that once we start lowering interest rates, which we will do eventually, that'll tank the market. So, we are in a bit of a yin and a yang time right now. And I think that's why it's very important to pay attention to the leaders like the Nvidias, all the mega caps, see how they're doing, see if the market looks good, the mega caps don't, it's probably not going to work. It's just not going to work. Let's see if these guys put a number on it. Thanks for the huge ad. I appreciate it. Oh, it's over here now. Trying to find dollars. Trying to find dollars. Anyway, there's here's the crux of the matter is we really can't know more than the people that are selling the stocks at the institutions. And so all we really have is the charts anyways. All right, let's do this again. May 2011 to October 2011. It just said May, so I'm just going to go to the beginning of these, or right around there. I'm not going to get too crazy with it. To October, right? Let's do the end of October. Do the end. I'm looking at the date. Okay. So there's your choppy recession. The funny thing too about the markets and all these fears of this and fears of that. I'll just say it right now. I was going to say it later, but notice that wasn't a recession. 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 So, out of all the declines, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, only 2 of them were recession. So who gives a shit? In reality, who actually cares? It's just headlines. It's just stupid ass headlines. Let's keep going with this exercise here. October 7 to March 2009. Wow, that's a long recession. October 7 to March 2009. Okay. Wow, I hit that on the head, didn't I? Okay, right there. So that's a great recession right there. Something interesting on this one, they timed the shit out of this one. Look at that. That's like right at the top. That's right at the breakout point. Like we're out of the recession. So here's why the institutions have the edge. And if we follow the institutions, we have not quite the same edge, but a pretty fucking good one. Um, Look at this one. They nailed this one. They just nailed it. Absolutely nailed it. Now, this is the recession time. Now, you have to keep in mind, too, that the beginning of a recession isn't known on the day that it starts. It's really known about a month after. It's 30 days after, and they know it ends 30 days after because they always do this by the month. And so you can see the price action here. So this is the beginning of the month-ish. I guess it's the middle of the month. Where's the beginning of the month? It's over here. Yeah, so they get it a month. They get it at the beginning of November is where they sell it. And then they buy it at a really good time. Look at that. That's where it ends. And then, oh, the recession's over. Let's buy stocks again. Or we don't need to sell, or whatever the case may be. That's it. Stocks go up. Just where is the best buy? Yeah. So that's the hard part. Where is the best buy? And you have to be patient and use good analysis. I have this thesis um, that I don't know if you can quantify with any algorithm or something, but if you like, just take this downtrend. If you can miss this much of the downtrend, you're doing good. You know what I mean? If you can miss, you're gonna get hit by the reversal, probably, depending on what you're doing. You're not gonna get this bottom. You're not gonna buy here, so you're not missing that. But if all you do is miss this, say you buy like here, this whole thing went down 17%, and you were able to cut out 7% of that. So you only overall kind of actually you sold here is what you did, and then you bought here. So you went down. You missed 11%. You went down like 6% or whatever the case may be. I don't know. I don't know how all this stuff works. You went down 4%. You go down 4%, you exit, you buy right back here, and then boom, you get that bounce. That's all you have to do. You don't have to nail the bottom. You don't have to nail the top. If you just miss this middle ground, if we look at all those little mini corrections and stuff, like this one, you'll probably break. Let's just be real. This one, maybe you exit here, maybe you enter right there, right? That's just a horizontal thing. This you can get some spread on, break even if you even sell it. That you don't sell, that you don't sell, that you don't sell. Maybe you break even here. This you'll probably make some, maybe break even. It's not a bad pattern. Doesn't really matter too much. Here, maybe you're selling off and you're trying to buy in back over here or something. Maybe something similar here. So you're gaining those little bits and pieces over the years. And I think that can really be powerful. I mean, really, really powerful. Imagine if you do that in the TQs. Okay. The TQs as an investment vehicle is ridiculous. If you guys don't know about this, obviously you do. But like, look at this. Let's say you missed out on that 20% drop. Let's just look at this drop. I don't know what it's about. Let's just look at it. Right now, actually, we kind of have to look at the NASDAQ. You really don't kind of want to look at the TQs. But look at this chart. So where do you get interested in this chart? Let's say you sell the top up here. You sell on the break of this 21 day for whatever reason on this day. Where do you get back in? Is it here? Is it on this horizontal breakout here? Is it on a declining trend line here? Is it on a slightly lower low that has a big bottoming candle right there? Is it on one of these? Is it on one of these lows that fails to go lower? Like, where do you get in? So you take this big ass spread and you miss a 20 plus percent decline, right? Like you sell here. That's it. You take a 10% hit, and let's say you buy here, right? And then you go back up and you're up 34%. You know what I mean? Like, that's huge. That's absolutely huge. Even if you don't short, Brandon, I don't really short. Yeah, I don't really short. Yeah, this one here. Yeah, I generally agree with you. I can see him too. I don't know. I don't know. It's just not my personality, I think, at this point. Maybe I'll try to do it again at some point, but shorts piss me off. I tried shorting in 2020 and it ended up flat and it pissed me off so much I didn't want to do it again. But yeah, that's a good short. I mean, even if you wanted to short that, that's fine. 25% drop. Yeah, because of the gaps. So, but here's the thing. Don't worry. See, this is TQQQ though. You have to realize this is much more volatile asset. Let's go to the Qs or let's just do the Qs, and we'll go to April 2012 because it's probably gonna screw with my chart. Yeah, see, told you. Here we go. There it is. So still a few gaps, not as bad, right? So you come up, you sell up here, because and then where do you start buying again? So you got this big down candle. You have declining selling pressure as we go lower. You have declining selling pressure, but it's not bounce. Here's that dead cat bounce right here, or a bear flag or whatever you want to call it. It goes down lower a little bit. You have that kind of a hammer candle. and that is your low. Hard to buy that. It's really hard to buy that low. It's not an amazing low, okay? Well, in my opinion, what's much easier to buy is probably something along here if you're going to bottom buy. In my estimation, you probably buy something like this, or you buy up here, but you know, by this time, you're well off of the lows, right? So you sell up here. Let's just say you sell that day at the low, and then you're basically missing 7%. All right, man. Yeah, Rom, have a good one, bud. Ah, geez, I'm almost 2 hours in. So just missing that. There's a study done, and I think I have it downloaded on my old computer files. It would probably take me a lot longer to find it than it took me to find Bukowski's chart pattern thing. Um, there's a lot of studies done, about if you miss the top 10 up days. What happens if you miss the top 10 up days? So this is like a whole thing. Timing the markets is impossible. Fuck you. 78% of the stock market best days occur during a bear market or during the first 2 months of a bull market. If you missed the market's 10 best days over the past 30 years, your returns would have been cut in half. And missing the best 30 days would have reduced your returns by an astonishing 83%. Crazy, right? So a lot of people um, go to a study similar to this. I'm not sure if this is really the one that they all tout, but some people here, not here, but some people in the markets say you can't time the market. Timing the market's impossible. You're a fucking idiot. Um, but what happens if you miss the 10 down days? See, but successfully avoiding the 10 worst days would have led to 2.5x gain over buy and hold. No one hears about this. I heard about this and about shit my pants because it just confirmed everything that I know. Is for guys like us, you can't afford to not time the markets. You absolutely can't afford to not time the markets. And I have this study. I believe I downloaded it. I could be wrong, but there's a study done. Some guy took the inverse of what everybody did and something like that. So, but actually, the fact of the matter, most people believe this shit is probably the reason that we even have an edge in the market. So I'm not even mad at him. I don't know. I kind of want to read this garbage thing. So now the other thing they have going for them is yeah, absolutely. This is great, right? This is for over the course of 73 years, you would have made $30 million. Well, great, you get that when you're 93 years old. Congratulations. But what if again, missing these days, that just compounds exponentially. Good days happen in bad markets. Yeah. But like that other study said, if you miss the bad days, you do even better. And that's kind of what I'm trying to highlight, I guess. The study's stupid. I'm trying to highlight that if you miss these bad days, if you can miss the bad days, but so here's the thing, Brandon, to your point. Oh, okay. Yeah, midday stuff like that. That's no 9 a.m. That's half an hour after the open. And out, yeah, half an hour after the open. Yeah. So, but to answer your earlier question, Brandon, it's a really long way to answer it. My point is that even if you just take out this middle gap, you don't need to time the bottom. You just need to get back in. So I guarantee you, when this sold off like this, it was just some stupid shit, garbage news or something stupid that didn't affect the macro sentiment. So you have these opportunities to like jump back in these markets. And yeah, this isn't even a day trading thing, Brandon. This is like other, right? So here it goes up. Let's say you sold here, right? This one you may have broken even. Let's say you waited the whole time and got back in here and sold over here. Maybe you lost a little bit, maybe you gained a little bit, but not much. Um, you see this high volume area here and then these three bottoms. you could have jumped back in like right on one of these days. Like say you exited here and say you bought there. Like that's probably the best case scenario. That's 3 points out of a $50 asset. That's a good 5%. But you just have to get back in once you realize the danger's over. That's the whole point. Once you realize the danger's over, you get back in. And you don't do that by headlines necessarily. You do that by the market action. And that was really evident here, I think, in 2022. And even 2018, you got to keep in mind, um, we timed the shit out of this really well. I don't know if we did well on this or not. That could have been a break even. We timed the shit out of this really well. Yeah, it's all about the rhythm. Exactly. And then I pretty much avoided all this. And then by the time this came in, like you would have avoided, huge drawdowns like this, like 26%. That does big. You have 100. So you get to $100,000 here. If you hold all through all this, by the time you get to here, you have $100,000. But let's say you buy here. So you go up, you have 100 grand. You take a drawdown of 10%. You have 90 grand. You take that 90 grand here and go back to the highs. You have 40% times 90 grand, which is like another $36,000. So you have $126,000. You have a 26% gain by the time you get back to equilibrium without any leverage or anything. And so they're just talking about missing the best days and shit like that. Like, that's for fools. That's for fools. Anyway, that's not what we do. So getting back to it, and then I got to go. Getting back to it here, yeah, we definitely aren't completely out of the woods yet. I think it's probably going to take a little bit more. I mean, we'll see if this Japan carry trade, if this keeps going. At the same time, though, one thing we talked about last week, though, is that our buying pressure is about as low as it gets. We don't get super low buying pressure that often, so it could be interesting. We can all, if we try to bounce right back, it's going to be what it's going to be. But I think a rollover and retest of the lows is definitely on the table. You can save yourself a lot of psychological and financial damage by buying, selling, taking a break, and repeating. Yeah, those break. I kind of have inadvertently done that. Maybe it's subconscious of me, but this whole 2022, 2023 thing, I didn't really participate in the markets at all. It just looked like shit. And then I wasn't as active as I should have been down here. Um, Although I did look at, I did call it really well actually. We did have some really good Nvidia trades that I never took that would have yielded thousands of percent. But we took the other trades. We took these trades, and we've done good this year, but and the latter half of last year. But I just kind of got lazy from the stock market during this time frame, so it's okay. It's all good. But yeah, I mean, speaking of Nvidia and market leadership, and I'll kind of end on this, I think you do have to identify the market leaders. So this inverted head and shoulders, yeah, we called this all the way up. That would have worked out brilliant. But you have to work with market leadership, and market leadership is topped out right now. So you can't really be super bullish when market leadership isn't super bullish because the market's not going to be bullish. It's called leadership for a reason. And so you got to look at the leaders. So let's look at Nvidia, Amazon, big gap down. There's a dead cat bounce for you. You got Meta, which is actually holding up just because of their AI stance, but you're not buying this. There's nothing to buy here. And then you got Apple, which is now a little choppy. Good breakout here. No follow through. Gap down to the breakout point. And some support, which is good, but you're not in a great spot. And then you've got Microsoft. That's what I was looking for. You got Microsoft down by the 200-day. So it's really not much to do right now. You look at Microsoft down at the 200-day. It didn't get here. It hasn't been here since a year and a half ago at the 200-day. So we're definitely in a lower. And then you're here, and then look what happens here. It chops like a motherfucker for like a year. So I don't think you're getting aggressive here. This isn't a V bottom like this was 2020. This was an event. And here, you go back, you hit it in 2018, and guess what happens? It chops up until it rolls over, then comes back and forms an actual base right there to buy off of, right? So it's just, I think understanding these dynamics of that, yeah, we just come off a good run. That's great. We're kind of done. We're kind of done for right now. So I don't think there's much to do necessarily. Um, I think there are positions to be had, and there is some money to be made in these environments. The problem is I still have a full time job, and I don't have a team to develop those strategies with, and I struggle with doing that on my own. With all these secondary strategies. So, but I do. There is opportunity. The question is, what's the opportunity? The question is, how much to risk for that opportunity based on the quality of the opportunity. There's a whole thing to this. And it's not just randomly trading the same shit over and over again. Some guys do that, and some guys do that well, and I think that's great. Um, but trying to time markets, I think, is different than trying to day trade, legs. I think it's different. And I try to trade markets. That's, I think, what I do differently than others and what some people don't understand. Anyway. All right, guys. That's it. I think I'm bouncing. Um, yeah, we'll see what happens, but I don't think we're fully out of the woods yet. There's a lot of data coming down the pipeline. All this whole recession talk is back in again, so that could spook the markets, and we'll see what happens. I will say this though. I will end with this: SOXL over TQQQ. It's much more volatile. If you can time a bottom decently well, you will definitely be rewarded. So, all right, guys, have a great day. What you got, Brandon? I, Working on identifying algorithms, chart patterns. Well, if you're working on something, I'll work with you, Brandon. I just haven't found anyone that's willing to be consistent. And everyone wants to go on their own little weird ass tangent, which is fine. They have the right to do that. But I don't know. I got pictures in my brain that need to be somewhere else other than my brain. And then yeah. Anyway, cool. Well, reach out. You know where to find me. Um, and yeah, we'll talk soon. Hopefully. All right, guys, have a great day. Thanks for joining me today. I appreciate it. As always, this is a live preview of the Power Hour. We usually go a little more in depth sometimes on these public ones because I'm talking to people. But all right, guys, have a great day. Stay safe out there. See you next time. Bye.